Welcome to the Divorce Podcast, a podcast that aims to address divorce, separation and co-parenting here in the UK, countering the often sensationalist way it's portrayed in the media, challenging the status quo and driving for reform. On each episode, I'm joined by experts to discuss divorce, separation and co-parenting from different angles and to give their opinions and to debate them. I'm Kate Daly, a relationship counsellor and divorce coach, co-founder of Amicable, the divorce services company, and host of this, the Divorce Podcast. In this episode, I was joined by Joe David. Joe is the UK's leading cryptocurrency accounting expert and founder of Miner. Following on from our last cryptocurrency and divorce episode, we wanted to take a deeper dive into the implications of cryptocurrency on divorce settlements. Joe started by outlining to me the various types of cryptocurrencies currently available in the market exchange, including the less well-known NFTs. These sorts of crypto assets can be problematic in the context of divorce, as they're often untraceable. But Joe told me it may sometimes be possible to trace these assets with the help of specialist support and guidance. We also explored why crypto is such a volatile asset, again something that's tricky to handle in a financial settlement. We discussed the apparent void in experts who are prepared to help couples to sort through their crypto assets due to its unregulated nature. However, Joe and I both agreed that Amicable and Miner would be happy to help if you're divorcing with crypto in your portfolio. I really hope you enjoy this episode. Welcome, Joe.
Hi, Kate. Thanks for having me.
Oh, it's lovely to see you. Thank you for taking the time. Now, I should say we have done an episode on crypto already, but we're hoping that this is a bit more of a deeper dive into the subject. But I think probably just in case people haven't heard it, and just for the benefit of people like me, let's start with some definitions and let's just go step by step. What is cryptocurrency?
Yeah, I mean, that's a whole episode in itself probably, but so in simple terms, cryptocurrency is a digitized form of money and assets. The one that most people would have heard about is Bitcoin, probably. Bitcoin was the first one, launched in 2008, and it was launched to kind of change the status quo in terms of the government-backed fiat currencies and how inflation was eroding the value of these currencies. So Bitcoin will only ever have 21 million in circulation, so it takes away the inflation problem in the future when
you can't print it like you can print more money.
Exactly. So it was kind of built as a payment system, but also as a store of value, a kind of digital gold, many people refer to it as. So that was where it started, and by a guy who's still kind of unknown as to who his identity actually is, but called Satoshi Nakamoto. So that was where it started. And then, as you can imagine, with all these things, when one thing starts, lots of others kind of join the party and come from there. And what that meant is now there's over 7,000 or something cryptocurrencies out there, ranging from probably the most solid, which would be a Bitcoin, all the way through to lots of other projects that probably just pop up and go away just as quickly as they come about. So yeah, it's a vast network, I would say, of international kind of borderless payments and stores of value.
So in traditional currency, we peg currencies, say, to the American dollar or whatever. It used to be the gold standard, now the dollar. Do these currencies peg against each other then? Is there a relative worth compared to other cryptocurrencies?
Yeah, so there are many different types of cryptocurrencies. As I said, there's over 7,000 as a number. So naturally, they need to be traded with something in order to purchase them. So the majority of cryptocurrencies will be pegged to a what we would call a dollar-backed stablecoin. And by that, we mean that there's a stablecoin, for example, called USDT, which is one of the biggest ones, called Tether. And that is pegged, in theory, one-to-one with the dollar. I use the word in theory because there's a bit of argument at the moment as to whether it is backed one-to-one to the dollar, but that's the principle behind that. So those stable coins are what kind of us in the crypto world call the safe haven, if you like, of crypto. So that happens. Now, what you will find is some of these smaller projects, they don't always have liquidity. I don't want to get too technical, but in a trading pair with a stable coin. So sometimes they're backed against Bitcoin or other large cap cryptocurrencies like Ethereum and things like that. So I would say the majority of the time they're backed by a dollar pegged stable coin.
Okay. And in terms of divorce, then this is important because ultimately in a divorce, one of the key things you have to do is value your assets and then decide how you're going to split them. So if you've got crypto in your portfolio, how do you split crypto?
Yeah, I mean, I think that's it's really interesting as a topic, because the challenge is going to be multiple kind of levels, really. First of all, you've got to determine, depending on the divorce, depending on how amicable it is and whatnot, you've got to understand how much crypto the partner, spouse has in the first instance. And that can be challenging in itself. People can have 20, 30, 50, 100 different wallets and exchanges where it's not like they have a Barclays Bank and a HSBC Bank. This is spread across a huge ecosystem of exchanges and wallets and blockchains, and it's not the most simple thing to manage. So I think the first thing is understanding how much is in that portfolio, and once you know that, go on. Sorry,
I was going to say. So when you say how much, you mean how many bitcoins or how many parts of a bitcoin? So in a traditional sort of financial disclosure, we might take screenshots or we might take details of bank statements or whatever, and we'll see a number or a value at the bottom. Is that the same with crypto? Can you go online, bring up your portfolio, and it'll have you've got 1/10 of a bitcoin and it's worth X? Is it that simple?
Yes and no. So the concept of it is that simple, in that we have got a blockchain that records every single transaction that can never be changed.
Right. So that's like a ledger then, so people understand.
Exactly.
Yeah.
And it can never, ever, ever be changed. Once it's stamped in that blockchain, it is there forever, and it is viewable by anybody in the world at any point in time. The challenge with that is, as easy as that sounds, the challenge with that is it will be locked under that wallet address. So if you don't know the wallet address, it won't say so-and-so's wallet address is so-and-so's name. It will say so-and-so's wallet address. So that's the challenge. Is yes, it's all there, but it's only there if you know how to get it. And it's only there if you know some further details in order to be able to get it from. So that's I think where the biggest challenge is some sense trusting the individual that they tell you everything that they need to tell you. The flip side of that, though, is, sorry, to just finish on that point, is that actually what you can do is you could follow the flow of transactions. So if you know a starting point, in theory, you can see where that money's gone, then where it's gone again, then where it's gone again, and then where it's gone again. So you could, in theory, if you knew how, follow that flow all the way through to a wallet that you didn't know about.
Right. So, okay. So I guess if you're doing an amicable divorce, and I'm using that in the generic sense, not our company sense, but if you're doing an amicable divorce and there is enough trust between you to make sure that you're disclosing assets properly, it's perfectly possible. This shouldn't be too scary for people. You can value, we'll come on to the changeability of the value in a moment, but you can get a value of a crypto asset, and it's fairly straightforward. You'll be able to evidence with a screenshot or whatever. The trick feels to me, or the difficulty feels to me, if you're not in an amicable place and you've got a spouse who wants to hide assets, crypto feels like a really nice way of doing that. Is that fair enough, or am I being too?
Yeah, no, I think that is fair enough. I'm a biased person in the sense that I'm fully on board with the crypto train. So I'm always going to be supportive of the crypto network. But I totally agree with you. There is huge opportunity, especially if the other person involved in this knows how to hide it and has the inclination to do it. Then it would be quite easy, to be honest, for them to hide things if they wanted to.
Right. Okay. And are there things that you feel the industry can do to overcome that? Because obviously there's a balance between people's privacy, but also then there's this issue of there are laws that all different countries have around when you have to disclose assets, whether that's for divorce or tax purposes or whatever else. So do you think there are things that could be done to ensure that there is some traceability?
Yeah, I think, again, it's a really difficult question, because the whole kind of premise of crypto is that it's decentralized by nature, and therefore it's not owned by one central party or governed by one central party. So it's very difficult to take a decentralized product that doesn't want to be regulated. That's the whole point of it. To then say, well, actually, we need to regulate it. And if you do that, you're going to end up, getting some people that will make something else that will also then be unregulated and blah blah. So I think there's a 100% an argument, and I am for elements of crypto regulation, but I think you're really going to struggle to regulate the whole market, because I just don't know how you will ever get to a point where you can regulate a whole decentralized market. So yeah, I think there's definitely more, and things like stable coins, they could have a lot more regulation on them, given what they are. They should be stable. They should be pegged to a US dollar. They should have a lot more regulation on them. And that might give you an opening to see some other transactions if you had a regulated part of a crypto situation, if that makes sense.
Well, that's what I just wanted to come back to. You said before, if you have an opening, you can actually follow this through. So if somebody was worried about it and they wanted to be more confident that their ex had disclosed all of their crypto, what's an opening? What am I looking for?
Yeah, I mean, again, just to be, I'm caveating everything I say here, but, just to be caveating that as well, there is an opening, and I'll come on to what that might be in a second. The real challenge you're going to have is there are also certain coins that are called privacy coins, and one of them you mentioned in the introduction, Monero. That is built to be private. That is built to be, once you use that currency and you use that blockchain, in theory, it's impossible to hack. It's impossible to know where the money's gone, and it's impossible to trace it, in theory. Now, I'm sure some point someone will find a way, but that's the theory behind it. So if somebody was to use something like that, that's going to be challenging. The other point to that is you can use something called a mixer, and basically what a mixer does is you send your money into a mixer address. We can get these online. You send it into this mixer address, and they send it. I don't know how the technical side of it works, but they send it to a completely random address. But actually, it goes to your address, if that makes sense. So as far as anyone looking at the transaction, they would see it going to completely random address over that way. And actually, it's gone over that way to your wallet. And that breaks that chain completely of where you are. So there are a few tricks of the trade. That's why I'm saying if you are smart enough, or if you are smart, that's probably unfair, but if you are in the space enough to know these tricks of the trade, there is that possibility. An opening that you would look for really is you would find something that goes back to somebody's name. So that would normally be a regulated exchange. Coinbase would be one. Binance, whilst they're not regulated, they now are pretty much enforcing KYC on all their users.
KYC?
Know your customer. So you would have to provide your driver's license and etc. So ultimately, if I sent money from my Binance account, which holds my name on it, to a anonymous wallet, and then to another anonymous wallet, you could follow back or you could follow forward from my Binance wallet through to those two anonymous wallets, if that makes sense. So whilst those two wallets might be anonymous, the originating transaction has my name all over it. And that is an opportunity then to follow that trail.
Okay. So it sounds to me like if you're in a good space and you're getting divorced and you're going to be open and honest about it, you can get values, you can trace where things have been, and there's enough sufficient cooperation between you to be able to at least value the crypto assets. So let's stick with that path for now, because the other path is very complicated. The other path basically means you're going to get specialists involved. You're going to have to get somebody maybe like yourself, a crypto accountant involved. You're going to have to potentially spend some money to try and trace this asset. And you've got to believe, if you're going to go down that road, that the asset is worth trying to trace, for one thing. So let's just park that for one. Let's talk about people who are cooperating and there's crypto in their asset portfolio. If I'm not the specialist, my partner's the one with all the crypto, do I want to be fighting for crypto in my divorce?
Well, I guess that depends what they've got. If they've got 200 Bitcoin and it's currently worth $35,000 or $38,000 today, you probably do. If it's a coin that's worth pennies, then, not. So, this is one of the biggest challenges, because if you're not the specialist, if you don't understand, Bitcoin, for example, someone telling you that there's 200 Bitcoin might mean nothing to you. So whereas actually that's quite a large sum of money.
Yeah. Well, it is today. Who knows about tomorrow?
Yeah, precisely. Yeah, it wasn't a few days ago. So so it's. I think that's the biggest challenge. Is it's impossible for me to say should you go after it. My argument would always be yes, because you actually never know what might be at the end of that rainbow.
Mm. But from your perspective, crypto is a burgeoning market. It's something to be excited about, interested in. there's a future in it. You know, if you've got the potential of getting some crypto through your divorce or whatever, then that you think that's a sensible investment at this point in time.
Yeah. Again, you know, not financial advice and all that, but it's one of those situations where if you can pick up some Bitcoin or any other coin for that matter, you know, we had a client, for example, that picked up a coin for $2,500, something like that, in January last year. By June, he'd cashed out $1 million.
Oh.
So my point, and this is one of those coins that you would argue doesn't have a huge amount of utility behind it, but it got on the hype train and it rose and it rose and it rose. So ultimately, you could be in a position where that exact situation happens to you. Same token as we just kind of joked about, you could be that it halves in a week. You know, that's also possible. So I think if there's crypto available, you should look into how much crypto you may be able to get. Once you've done that, you should probably then take some advice around whether you hold some of that or whether you sell some of that immediately in order to realize some cash. But if you're happy to take the risk on the market, there are huge gains available to people.
And just like there are financial advisors who specialize in different asset classes, presumably there are crypto specialists. And is that what you do then? You can advise people on whether to cash it or hold it or...
Yeah. So again, we're in a territory of regulation, and a lot of financial advisors won't discuss crypto with you because it's not regulated, and therefore, because they're so heavily regulated, their regulator won't allow them to discuss something that isn't. So you will actually probably struggle to find a kind of legitimate, in inverted commas, person that is willing to give you official advice. We're slightly different in that we're regulated from accounting services, but we're not regulated by the FCA. So we don't actually have the same obligation as a financial advisor. So we could give you an opinion, we could have a conversation with you. But in terms of actual regulated advice, you can't receive that at the moment because there is no regulated market for it.
I guess what I'm getting at is, if you're the novice, is it still worth doing? Or is it just too complicated for the novice at this stage? And if there are other assets, go after the other assets, because crypto actually is quite a big risk. So I'm just trying to weave that line. I suppose it depends on your risk profile as a person ultimately, doesn't it?
Yeah, totally. I mean, if you're going to have an opportunity to take £500,000 worth of Bitcoin or £500,000 worth of property, you know, the scenario again is the same. You know, would you be, you know, your chances of that 500,000 becoming $1 million with crypto is a much quicker potential than the property. But by the same token, the chance of that going to $250,000 is much more likely than it is with the property. So, you know, if you're willing to take that risk, the rewards are significantly higher potential, but so are the downsides. You know, if you want to take a property, that's a much more stable kind of asset that you'd hope would go up. But if it does dip, it won't dip, you know, it might dip 15, 20%, something like that. But that's probably all you're going to see. So, yeah, I mean, that's the biggest problem with crypto is as soon as there's any market sentiment in the global financial position that is kind of concerning, the first thing that's sold off is the risky assets, and the risky assets are crypto. So, you know, naturally they drop significantly because people come out of that risk and they go into less risky opportunities. So I think if you've got the opportunity to get crypto or nothing, I would 100% say it's worth taking that crypto in terms of the potential that it could be. But if you're risk averse and you don't understand it and you don't really want to understand it, go for the thing you know and take that instead, I would say.
And it's not as simple as going to an IFA, as you say, because they can't advise you. But if you do end up with crypto as part of your settlement, there are people such as yourselves that you can go to get some help with this.
Yeah, so there's two ways we could help in one sense. You know, A, we could help on the kind of the tax side of it, so we could let you, because that's the other thing. And, you know, one thing I've made a note to make sure I mention today is that please, if you are in a situation where you're receiving crypto, please look into the tax implications of it, because many people in crypto don't understand the implications of tax within cryptocurrency, let alone people that are outside of it. So please do, I know this is not a tax webinar, but please do, you know, kind of take that advice. So the first way we can help is that tax. We can help you understand the tax position, etc. The second way is we've obviously got a wide network of crypto people that we trust, that we've worked with, that we could put you in touch with to get different opinions around, you know, the asset classes you've got and things like that. And we can also work with IFAs where they might be talking about other kind of assets. We can have the conversation as a kind of three to say, look, this is IFA position, this is crypto position. What do you want to do as a kind of person on the other side of the table? So yeah, talk to a professional that understands it. And even if they can't give you the advice, they'll have a wide network that we'll be able to support.
Okay. We touched on earlier, there are obviously different types of cryptocurrency. And one of the kind of buzzwords that's doing the rounds at the moment is non-fungible tokens.
Yeah.
Tell me what they are.
Yeah, so again, another whole episode in itself. But so non-fungible tokens are, or short NFT is probably what a lot of people have heard of at the moment, are effectively one-of-a-kind, unique digital assets that are effectively tradable on the open market. So the reason that they are non-fungible means there's only one of. So, crypto themselves, so Bitcoin is fungible because there's potentially going to be in the future 21 million of them. Now we've got a digital, and at the moment it's all focused around digital art. And I'm sure people have seen many stories around millions and millions of dollars being spent on digital art. For me, though, there's a real big difference from a digital art NFT and actually what NFTs have the ability to do. So the NFT itself has the ability to act as like a gateway to a vast array of other kind of situations where, for example, we're looking at launching our own NFT and we might give discount off our services, or we might, so if you hold our NFT, you get a discount off our service and 3 other partners that we've got. Or if you had an art gallery, you could say, unless you're an NFT holder, you can't get into our art gallery or something. So it's a way of kind of allowing access to certain things. The other way, in America, there's a basketball team, the Dallas Mavericks, and their owner, Mark Cuban, is quite big on crypto. And he has said that he might look at his season tickets being non-fungible tokens, because what that means is I can't go to the game tonight, and Kate, you want to go? When I trade that with you, you can look on the blockchain and you can verify that I own it. So you don't turn up at the game after paying me money and find out that you can't go in because it's a fraudulent ticket. So there's lots of ways I think that NFTs can be used in a really, really positive way. I think we're overinflating a little bit on a picture online, but NFTs as a concept, they need to start somewhere, and I think as a concept they've got huge value.
So if someone's got like an NFT, then can they trade it in a divorce? Is it?
Yeah, so again, it's, it comes back to the crypto side of things. There's a huge open market for Bitcoin. There's less of a market for the 7,267th coin, for example. Do you know what I mean? So it's the same with NFTs. There's a big one going around called the Bored Ape Yacht Club, and lots of they're basic pictures of apes, and lots of celebrities have got them. Now they're like one of the most traded NFTs on the market, so you can easily sell that. It will take you 2 seconds, and someone will pay for it. Whereas there are other ones that may have only just launched. We've got some clients that have just launched. There aren't many people buying those, so it would be more difficult to trade those for any real value. So again, it comes back to the crypto point: is unless you're going to get something that you really can see an open market for, you should really consider what value actually is put on that particular asset, because it can vary so much.
And do you think volatility is just because of a new and growing market rather than this is how it's always going to be? Or do you think there's always going to be the issue? Because in a divorce scenario, you do your full and frank financial disclosure and it then goes off to the court along with all your paperwork. The court can take 6 to 8 weeks to approve the order. You've then got a few more weeks of implementing it. So you can easily go 3, 4, 5 months between doing your disclosure and actually realizing the order itself and getting cash or assets transferred to you. Presumably in that time, if we put up a graph now of how Bitcoin had done over the past 4 or 5 months, we'd be looking at huge differences, wouldn't we? Which fundamentally affect the fairness of a divorce settlement.
100%. And just to give you the stats on that, the all-time high was in November and it was $68,000. As of right now, it's about $38,000. As of the weekend, just gone, it was about $32,000. So as you just said, the fluctuation is absolutely incredible in the market. And I agree with you. I think at the moment, we are in a place where the number of people that hold crypto is not enough. Therefore, the people that hold a large amount can affect the market quite significantly. And one example, I'm sure we all know, Elon Musk, he said that he would accept Bitcoin back in kind of April, March time for Tesla. And shortly after that decided that there was environmental issues that didn't fit the Tesla brand. And they decided they weren't going to accept it anymore. And the accepting of it pushed the price extremely high. and the saying we're not going to accept it anymore pushed the currency down significantly. And that's one person. I appreciate he's a billionaire and one of the most well-known people in the world. But my point is, if one person can move a market so much like that, it's a worrying place to be. I would totally agree. So I think once we get more institutional money into crypto, once there's more larger kind of holders of crypto, and also I think when we get more regulation on it, I think there will be a bit more stability. But for people like me who quite like trading the volatility, I kind of don't want that, because I'm quite like the swings and the roundabouts. Whereas I totally understand though that for it to be a real world asset that is used and traded in the real world, it needs some kind of stability.
Yeah, obviously, you're having crypto as an investment and trading it for the thrill and the fun of it is one thing. Having it as part of your divorce settlement is a completely different scenario, isn't it? And do you see many people where crypto is part of a divorce settlement and you're having to help or advise or guide them?
Yeah, it's an interesting one actually, because we haven't had loads, but we have had definitely a handful of situations where people have come to us with situations in this scenario. And it's similarly, we also have it when people want to buy property, because lawyers in a similar vein want to be able to track the kind of process of the funds and things. So it's definitely something we can help with, and it is something we have helped with. But it's that question around, how do we give you a valuation of something that is going to move so significantly on a daily basis? We've got to either, do you take them into custody of someone else? But even then, that's very difficult to force. So it's really a really difficult position. You could say that this is the snapshot and it's on you, Mr. Other side of this fence. If you leave it in there and it goes down, that's your problem. You need to still make up the difference. So yeah, we can definitely do that. And there are a lot of marketplaces to find the information in order to be able to value these assets. If I can just quickly on that, the real challenge you're going to find is there's a lot of cryptos that do. So back in 2017-18, there was a big hype of ICOs, which was initial coin offering. So it was crypto's version of an IPO, right? And I probably would hazard a guess that over 50% of those ICOs were scams, and they were not what they said they were going to be over the longer time period. So the real challenge with those ICOs is you do an ICO, Kate, and I say, absolutely, I'd love to have some coins in your ICO. You give me those coins for $5,000 or whatever. At this point, there's no tradable market potentially, because we've bought into you at an early stage, waiting for you to be in market in 3 months' time. So you could argue that the transaction's worth $5,000, but you could also argue that actually that company's moved on in 2 months and therefore they're worth more, but there's no market for this. So that's another challenge, is how do you value something without an active market, and how do you agree on a value?
Is that the same though as, now people have lots of investments in startup companies, don't they, where you can't actually trade those shares because there isn't a market for trading them. You've just got a bit of them and you're hoping they're going to be the next unicorn or whatever when you will be able to trade them. Is that the same kind of principle?
It's the same principle. The difference is you could hire a business valuation expert to value the business that you have those shares in, and they are very available, and therefore you could get a valuation signed off by a professional that is regulated and respected as a person that does that. You don't have that in crypto. That's the challenge, because the one thing that we've got to bear in mind, and this is not for this episode as such, but is that this is not a security, as the US would call it. This is not a share of a business. This is a token that is part of a project or a protocol or something. So what the business is valued at could be very different to what the token price is, if that makes sense. So that's, I think, the big challenge is you haven't got that element of valuation that you would have in a traditional world.
There's nothing behind the token, is there? There's nothing of value behind the token. It is just a value for the value's sake.
Yeah.
Yeah.
And the only way in some circumstances you can trade it is through a decentralized platform, which is basically peer-to-peer. So I go on that platform and say, I want to sell this asset. You come on it and say you want to buy it, and we just do a deal at that time. Now, you could argue that's a value, but I could also argue, well, hang on a second, that's not a value. I just decided that at that moment I wanted to sell this, for this reason. That doesn't deem a value for one transaction. So that's, I think, is the biggest challenge, is getting together enough evidence to prove that is a hard and fast value.
Yeah. And do you think that, people that deal with divorce understand this? And lawyers, the courts, barristers, people like us that help people, mediators, negotiation experts, do you think we understand enough about this to help people?
Yeah. I mean, in a generalistic sense, my answer would be no. And the reason for that is, I deal with a lot of lawyers on verifying funds from a property perspective. And I can tell you now that probably 90%, maybe even 95% of lawyers that we speak to won't even deal with somebody if they've got an element of crypto that's being involved in a house purchase. So we've got certain firms that we know will accept it. Even banks, banks won't accept. HSBC, I was speaking to the other day, literally refuse outright. If any money comes anywhere from crypto, they won't accept it. So they won't give you a mortgage on that basis. So I think if you've got institutions like that and lawyers that can't handle it and don't want to handle it, you can totally understand that a court system where, they're in probably a situation where they don't deal with it very often, why would they? So I do think it's going to be a real challenge. And I think, that's where I think the difficulty comes, because we've had conversations, like I say, at times, and I've got to think about where that line is between a legal bit of advice and me being an accountant and a crypto specialist is, I can't say to that person X, Y, or Z legally because I'm not legally allowed to say that type of thing. So it's really, really difficult. I think that the whole space needs to be upskilled in all different sectors of the economy and our way we live.
I guess from our perspective, it feels like if lawyers won't deal with this, then people can come to Amicable because we help, in a non-legal setting. We're helping people negotiate and understand their assets and come up with a way of splitting them and sharing them that works for them and their family. So I guess that gives us the opportunity to help and to have these conversations. And it's great to know that there are people such as yourself that we can refer couples to just have that general conversation. Because I think if you can understand, as we've been sort of unpicking some of these things today, if you can understand some of it, I think it helps you make better decisions, and it helps you understand whether you do want a bit of crypto in your profile or whether actually that's an asset you want to pass on and you want to offset that against something else that's in your kind of asset pot as a couple. So
absolutely. And I totally agree. And I think that's where the likes of you and I, where we've got a little bit less regulatory pressure, it gives us the opportunity, like you say, to have some flexibility and be a bit kind of like, right, guys, what we're going to do here. The other thing to point out, and I'm not saying that we can give out too much information, but obviously we could in a legal point, is some people will have declared this on a tax return. So you might find that they might not be telling you the truth, but actually they've had to tell me the truth in order to declare their tax return. And we might, quite often we say to clients, oh, you didn't tell us about this wallet that we found. And they say, oh, yeah, I forgot about that one. Now, whether they genuinely did or not is irrelevant. But my point is, if a court therefore ordered us, in a court order to present that data, then we would have to do that. So, I think there's that side of it as well. If you know, or if you've got an inclination that an accountant may have been involved in the process, then that's another way potentially you could get a court to order that information from that party.
So just to be clear, crypto has to be declared on your tax return. So that is then the route back, isn't it, So that must be the same problem then. How do you put a value on a tax return? I mean, that's the same problem as how do you put a value on an assets and debt schedule in a divorce?
So ultimately the way we would do it is we use software for a start. And secondly, there are price aggregators. So there's one called CoinMarketCap, for example. And I don't know if it's possible to put it in the notes or anything, but I could give you the link to that if you want to put it in the notes of the episode. But that's an aggregator effectively. It doesn't have every crypto on there, but it has a significant amount. And those sorts of websites will give you a rough idea, and they'll be close enough as to what a crypto might be worth. So ultimately we're using that similar process. What we talked about though, if we've got a situation where there's no market value for something, you're completely right. How do we as accountants value that? That's a question in itself. So we have that debate and problem with clients, all the time. So yeah, but at least if there's an accountant involved or, something like that, there is potentially a route to some kind of information.
Well, there's a route to an agreed value somewhere in that, isn't there? And that's ultimately the point. I always say to people, you can't expect your divorce to sort out the whole of the rest of your financial future. Things are going to happen, but you've just got to get a good enough starting point, haven't you, to be able to build on and move on.
Exactly.
It's fascinating, Joe. It really is. I was a bit nervous about doing this. I think I won't even know what questions to ask you, but it's been really useful just to have that sort of basic walkthrough of crypto and the pitfalls and the and also the positive sides of things as well, and to give people a bit of confidence to actually take crypto as part of their settlements. That's the key, isn't it? The more varied your portfolio, the more opportunities you'll have. So thank you very much. Where can people find out a bit more about you?
Yeah, so across Twitter, which is a great place to find out information about crypto as well. If people want to learn a bit more about crypto, Twitter's a great place for that. We're at Miner Accountants. Spelled Miner, as you can see on my jumper. Or those who listen on the podcast, I guess, can't. But,
MYNA.
And you can find me personally on Twitter. We'll give you the handles, and also I'm on LinkedIn, Joe David on LinkedIn. And our website is mineraccountants.co. So mynaccountants.co, and reach out to us on there, and we'd love to help where we can.
That's brilliant. Thank you. And of course, you can find me on Twitter too. I'm at Kate_Daly, and you can hear more about new podcast episodes by following at divorce_podcast. And if you want to subscribe to this podcast, you can visit thedivorcepodcast.com. I hope you've enjoyed it as much as I have. Thank you very much for listening, and thank you very much indeed, Joe.
No problem. Thank you, Kate.